Does it make sense to pay points to get a lower rate? You might be surprised to find the answer. So that's what we're going to go over next. So what we try to do on the channel is to teach you to be a good financial steward of your money. So what we want to talk about today is paying points actually a good thing to do when you're getting a mortgage or not? So first off, let's explain what points are. So let's go to the CFPB, and this is what they have posted. What are discount points and lender credits, and how do they work? So we're going to focus right now is just what are discount points. So let's scroll down here, and this says points. Points let you make a trade-off between your upfront costs and your monthly mortgage payment. By paying points, you pay more upfront, but you receive a lower interest rate and therefore pay less over time on interest because you're buying down the interest rate. Points can be a good choice for someone who knows that they're going to keep the loan for a long time. And that's why I say to a lot of my clients, first thing is, you want to pay points, you want to pay extra costs. Does it make sense? And what I usually always say is, just as a rule of thumb, are you going to be there 5 years and more, 5 years or less? So let's dig into the numbers. All right, so let's break down the numbers. Here's what happens is when you call in or you apply for a loan, we pull your credit, get your loan approved, and then we start searching the country to figure out who's got the best program and rates and packages for you, the client that called in. And this is how we figure out where we're going to place your loan. All right, so when we go into our search engine, we plug in all your criteria, and this person's criteria was they're looking for a $360,000 loan on a $450,000 purchase. That means they're at 80% loan to value, meaning they put down 20%, and it's a 30-day lock. They have a house under contract that needs to close within 30 days. What happens is we scan the whole country and find rate sheets or rates all over the board. So these are all the rates that are out there. And I explained to you guys the other day how this works. So what we do is, it's our job to find the right lender for you and negotiate prices and costs and everything else. So let's go to the top one. This is a breakdown of all the rates available to you on behalf of this lender. Okay, so the rates start at 3.25. They go all the way down to 5.125. Now, let me explain this. As you go across this cell, all right, this is the rate. Okay, let's ignore the APR right now. This is what's called the price and the rebate and the discount. Okay, so let's break it down. This is the rate you could get, but the price is at 98.5. Let's scrap that for now. We're going to say, well, to get that rate, it would cost you 1.42% of the loan amount, or a dollar figure of $5,112. So you get a rate at 3.25 if you want to spend $5,000. Right? Is it prudent? Might be, might not be. That's why I always ask my clients, what's your time frame? Are you looking 5 years or less and how long you're going to be there, or 5 years or more? And I'm going to explain that here in a second using our nifty calculator. But as you go down through here, you're going to start seeing green. Okay, the green means, well, red first off means how much it's going to cost you. Green is how much money back or a lender credit back are you going to get? So when you apply for a loan, they're like, hey, there's no closing cost or anything. It's usually because you had slightly higher rate, and that's compensated right through here. So again, on this one, let's say, for example, if you went with 3.625, instead of paying $5,112, you'd actually get back $1,134. Okay, so that's how it works. As the rate goes up, you get more of a credit because you're paying more interest and more stuff over time. So what a lot of people think is, well, would it make sense to buy down the rate? So in this case, let's say, for example, we can get 3.625, and this would actually give you a credit of 0.315, or would it make sense to buy it down to 3.25? So let's take down these numbers and go to our nifty calculator and see what makes sense. So where do you find this nifty calculator? Well, go to therateupdate.com, and at the top line, you're going to choose, I should go on the blooper reel, choose the calculator button. And then the one you're going to choose is, should I pay points for a lower interest rate? Okay, so we plugged in the numbers for this file, and then let's get out of my head. So let's break all this down for you. Loan amount is $360,000. Interest rate, 3.625. Interest rate with points, 3.25. How much is it going to cost you? It's going to cost you 1.582. Hold on, let's go back there and make sure that's right. 1.42. I'm sorry, 1.42. And these numbers aren't going to be absolutely correct, but I want you to just get the point of what we're doing. So then you click it. All right. Don't put anything as your savings rate, because who knows, you might have it in your savings account getting 0.00001%, or you might have it in some investment getting 10, 15%, but that's irrelevant at this point. So it's going to show us the numbers and it's going to say your break-even point is here. So what does that mean? Okay. So basically it means if you sell or get rid of the house or refinance within 5 years and 8 months, you shouldn't have paid the points. Okay. But if you plan on taking this loan or keeping this loan for over 5 years and 8 months, you'll be better off. So that's why many times, or in most cases, I'm asking my clients, what's your plans? And these are the little things that we do for you to pick your brain to see what is the best program, product, buying down, numbers, dissecting all this stuff. That's why I always say to my clients, I'm looking to put you in the loan that I personally would take. And I do hundreds and thousands of loans a year. So I kind of know what I'm doing, and I'm looking out for you guys' interest. Why? I don't want any bad reflections on my YouTube. YouTube generates most of our business that's coming in. I'll be honest with that. So thanks to you guys for using or checking us out and using our system at the rate update and the mortgage update with Dan Frio. It keeps us in business. So I want to make sure I do a great job for you, so then you share my information with your family, friends, relatives, and everything else to keep us in business. So this is just explaining how points might be a good idea or might not. It's up to you, and especially is up to how long you're going to spend in that house. So thanks for watching the video. I hope you got benefit out of it. If you did, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time we post a video, you get an alert. Hope to hear from you soon.